Hey, do boo boo. Hey, good morning. Welcome to QuantBox Live, where we get our global macro on. It's 6:32 on Wall Street, about 3 hours before the open of trading. This is our hour of power, where we add fundamental analysis of macroeconomic data, comparative analysis between economies. We do analysis of market sentiment based on overnight trading, but we also look at market sentiment in regards to a basket and then of assets, and then correlate them towards risk. Okay, we look at long-term data like the economic analysis of central banking staff for inflation and for interest rate policy and more. I mean, that is a lot. Oh, and I even forgot. QuantBox does technical analysis. Now, it's not looking for patterns, it's analyzing trend statistically. So, QuantBox does an amazing amount of stuff. Bloomberg Terminal is $2,200 a month. QuantBox is $79 a month. Okay. But the thing is, what it'll end up bringing to your trading is organization and logic. So you can make an informed decision like, hey, man, Bitcoin's going up. Really? Maybe you should be a buyer. So, anyways, YouTubers, why don't you take a test drive? It's less than $8. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hang on, I'm going to get my chair to lean back. Whoa. Okay, now it's leaning back. Lean back. Oh, I can put my feet up. Oh, look at this. Look at this. Nice. Wow. All right, let's log in and then go to the database. I guess I could put my camera down a little bit now, huh? That's all right. Hey, it's Tuesday. I'm exhausted. Actually, I'm not exhausted right now. I got almost 8 hours of sleep last night. I feel fired up. I feel lazy. Okay, so let's start. Let me zoom in here. Ching pachow. Yields are back at 4.3. All right. Well, I don't really like that, but it's not that surprising. Oil down to 77 and a half. All right. Not a lot going on there relative to what's happened in the previous week. So that's kind of stabilized. Gold, I said yesterday, might be interesting for potential upward movement, and it went up 1/3 of 1%. Yeah, well, okay. Well, the key level here is 2050, so we're back there. Now it's sort of a wait and see. S&P 500 having trouble getting to a higher level. It's a key level. 5100 is a key level. In fact, it was many people's targets for the year. We've been kind of farting around that number for a while. Is it the top for me? It actually could be. Okay, euro dollar flat. And Bitcoin, whoa, shut the back door. It was clearly over 57,000 earlier today. So 10.5% doesn't even express the true move that it's had. It was up much more than that. Oh, God. Yeah. Pound Aussie, very bullish. CAD Swissy, bullish. CAD Yen, bullish. Pound dollar, bullish. Pound Yen. So pound, pound, CAD, CAD, pound. Over here, Aussie CAD, so that's a CAD play. Euro pound, Euro CAD. Okay. So there's quite a bit of theme here. Maybe CAD, maybe pound, huh? Let's let's dive into the scatter plot a little more closely. And what do you think? Do you consider Bitcoin an outlier? Well, Boris, why don't you ask that at Investor Boot Camp so I can go into better detail? Are you going to do today's week on the street with me? We're swing trading group. That's another one on Thursday. Cool. All right, so let's get rid of the outlier. And there we go. And we're kind of like where we were yesterday. Everything is up, sort of. No, I shouldn't say that. Everything is to the right. Half of the things should be up, but they're not. So anyway, uh yeah, underperformers here. These might be buy the dips. These might be opportunities down here. But we know many of these yen pairs, are at very high levels of resistance. So, let's say it this way, if we were in the middle of a trend, I would say these are buy the dip opportunities. Now, we may not be in the middle of a trend. We're in a very mature trend. How do you know? Oh, that's a good question. Hang on, now I got to get my drawing tool. Thank you very much. Gee whiz, all of this inconvenience. All right, there's my. There it is. All right, so a mature trend looks like this, right? And then, sorry, a strong trend, and then as it matures, it slows down, right? And then starts to consolidate. And so, in many of these, you might find that it's maturing and turning into more of consolidation than an uptrend. In which, is it getting ready to reverse? Don't know. The key one that I would watch for that is USD yen. We're near 151, and 152 is just like the biggest level of resistance of the decade, let's say. Like big, 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 big. And 151 is big, but this is like big, 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 big. So if there's a rejection at these levels, then all the yen pairs are going to come down. Let's go back to the risk gauges. So nothing. Is this important? Well, let me just throw something out there. Let's say, hypothetically, you've lost money in the last 4 or 5 weeks of trading, even a significant, well, especially a significant amount. It's because you're not paying attention to even the basic tools that QuantBox is telling you. The most basic thing you could use, I would say, is this page. What's going on? Nothing. So if you lost a ton of money, it's because you're out there on the ice floes doing something that doesn't make any sense. Okay, just you and the polar bears. You're like, Wayne, I don't understand that analogy. Shh, you're thinking too hard. You are trading and apparently losing a lot of money. I don't know if this is you. I'm just saying, if you are losing a lot of money and you have in the last 4 or 5 weeks, and you're like, QuantBox sucks, dude. No, it doesn't. Start with the basics. What's the trend? There's no trend. So what is it that you're doing? I've been trying to trend trade. That's a problem with you, not with QuantBox. Right? Denise is like, right. But that's ultimately so here's what you're doing now. You're out in the ocean with a fish finder trying to find one fish at a time. The season isn't really right. The weather isn't very good. The currents are not really working. Right? There's just nothing is right. It's every the odds are against you. You might find one swordfish to catch. You might catch it, you might not catch it. It's an elusive fish. Right? You're just out there in the ocean, floating around in stormy, choppy weather. Wind is blowing left, or I guess I should say east. Currents are going west. You're kind of just going in circles, and you're trying to find one fish in a choppy ocean. Oh, are you burning a lot of diesel fuel? Uh-huh. So really Start with this. You might have to tread water for 3 months. Should you know that? Is this good information? Dude, this is the most powerful thing you can imagine, this page. Just to know there's nothing going on. So now when you go find a trade, you're hunting for one fish. Now, it's hard to find the right fish or any fish. You're going to waste a lot of time dropping lines and towing nets for nothing. There's a cost to that. Yeah. Maybe you should think more like a farmer. Farming is very interesting, right? You could when you're pulling the the various tools that get pulled behind a tractor. Think of it this way: if you dig too deep, you're burning fuel. You're just burning money. You're digging 1 inch too deep. 1 inch too deep. And it's pulling on your tractor, and your tractor's, at 5,000 RPMs the whole day. I don't know the RPM, but you're putting a lot of weight for no reason, and you're burning fuel and putting stress on your machines. It's costing you money. And this is irregardless of the weather or what you're going to plant. You're just burning fuel for no particular reason. But if you go in too shallow, the seeds don't grow. You got to get it perfect. Nature is unforgiving. When was the last time we spent 3 weeks alone in the forest? You know what? You're going to die. Nature is unforgiving, right? So, anyway, so we have a very rough, rough conditions. There's no intrinsic trend. And whether you're a fisherman pulling nets out at an empty sea, or you're a farmer just digging 2 inches too deep for no particular reason, you're burning fuel and costing money. So if you're doing a lot of trades right now and losing money, it's because you're making these basic mistakes. And right now, maybe you should be treading water, maybe, whatever, but be very careful. At least go into what you're doing. Like you can go hunt for swordfish. Okay. You can go find your one off trade, but just be very careful knowing that there's no underlying intrinsic trend. I've met with the developers a couple of times about adding the bid call ratio to this. I think is really cool, which tells you which direction are the options players going. Are they placing bets that will benefit if the market goes up, or are they placing bets that will benefit if the market goes down? We'll throw that in there. Okay. All right. But anywho, so just be careful. Just be careful. Today is gonna be the day. Throw it on back to you. Low, low, low. Low, low, low. We got news later in the week. Should be fairly interesting. Let me just change this. I did talk to the team again, and they have a next version of the calendar almost ready. Yeah, I'm going to stay away from this. I just don't like it. We have inflation later this week, though, don't we? What day is that? I can't even find it on the stupid calendar. Traders, the new technical analysis service, has a really nice, well, let's say a functioning calendar. Yeah, hey, that's good. Big upgrade. Yeah. But it's got a great scalping tool to tell you which things to even pay attention to. And I can't find it. I have too many pages open. Okay, taking a look at this. Euro dollar has in January saw more risk on. That's normal. Usually euro dollar comes down in January, which means the stock market's usually not performing well. We've had the opposite. So, in January and even in February, the stock market has been quite bullish, right? So, what happens to euro dollar in a bullish scenario? Up. Good to know. Okay. Typically, Aussie dollar is down in January, February. No, it was up. So, what happens when the stock market's up for Aussie dollar? What happens when the stock market is up for Kiwi dollar? What happens when the stock market is up for dollar CAD? What typically happens with the stock market up dollar yen? You see the correlation? Now, I've been preaching this correlation for 20 years. And I even see people on TV get this wrong. For some reason, I mean, look, you've probably known me for a while, so this seems basic, right? That the dollar weakens when things are good, but people don't get it. It's not widely understood. And yet we can see across the board, we know the stock market had rallied and every single asset here, dollar weakened. So something that's quite factual that even many professionals don't quite get, which is strange, isn't it? I don't know why. I used to struggle with that. Like, why don't they know? I don't care anymore. Right? As soon as you start getting gray hairs, you're just like, I don't care anymore. Who cares? That's their problem. I'm sorry, I can't solve the world's problems. So, anyways, there you go. Now you got proof. Good to know, right? Just kind of reaffirm what should be working. No, let's go to the scorecard summary. Okay, pound Aussie and pound dollar still should be bullish for multiple reasons. CAD Swissy, CAD yen. So we got some pound and some CAD that should do fairly well. You see pound versus Swissy, pound versus yen. Okay. You see CAD versus yen, CAD versus Swissy. Back to the pounds again. So right now, that's okay. It's all there. And on the flip side, okay, Aussie's weak. Aussie's weak. Interesting. Aussie is weak. Aussie is weak. But a little bit Aussie weakness when you're looking at this economically. Notice how quickly we get into neutral. Yeah. Which tells you that um, if there's nothing really bearish, then most things must be neutral, right? They're either both strong or they're both weak. But Aussie is on the weaker side. We can see that across the board. Notice against commodity currencies too, which is really strange. One of the things that have been working okay has been yen pair. So QuantBox says Aussie's weak. Well, we could take a look. Okay. And against yen is actually neutral. Well, what about CAD? Okay. Nice score, but technically it's not that great. I mean, it doesn't look like an amazing trend this way, but it's bullish. Okay. Institutional investors don't love it. So it could be more bullish. We can contrast that to the beast, the widowmaker. This too is bullish. But again, not amazing. More institutional investors on this one. Okay, remember CAD yen was 50-50 and pound yen 70-30. So a little bit better. Go look at Kiwi, see how the Kiwi's doing. Okay. 60% of institutional investors. So this one's 60-40. Okay. Has been underproducing versus the other ones, but maybe this is one you start climbing on. It's not bullish, but maybe it's moving out of neutrality and into bullishness. The slope isn't great. And it's only 60-40, but what if money starts moving toward there? So that's where you'd watch the COT data. Is money in the future moving toward New Zealand dollar? Is it you know, is it an opportunity? That's what you're looking. Is it becoming an opportunity? How does that compare and contrast with euro yen? It's bullish. Okay. It's 60-40 long. Okay. It's got some beautiful seasonality. Okay. That's doing okay. Heavily shorted by retail. Okay. I think I'm long this one. I can't remember. And then Swissy yen. What about Swissy yen? This is an oddity, this one. Because normally Swissy and yen are funding pairs. They usually have a high correlation. And you see it here where 64% of the market is short Swissy and 76% of the market is short yen. So the market is short both these. So you would expect it to underperform. And that's why I very rarely trade Swissy yen. I think I have one, but it's a break even trade worth, hardly anything. But it shows you that it's different, isn't it? This is why we have comparative analysis. we're comparing Switzerland to Japan, and I just went through yet all the yen pairs, and they're all different variations of the same thing. 60-40 long, 70-30 long, and then you get to Swissy yen, 70-30 short. It shows you the market considers these assets as different than the other assets, the same as each other, and then thus correlated in their positioning. And retail doesn't understand across the board. It doesn't matter to retail, which is funny, isn't it? Retail thinks it's the same. CAD yen, Aussie yen, pound yen, Swissy yen, the same, just the same. And it shows you the clue train has not pulled into the station for retail. They're just not on any clue train. There is no clue train. Sorry, the clue train broke down at the other station. Yeah. Yeah. So you pick your theme. You got to go thematic here. If there's no trend, you got to kind of pick your trend. You got to make your trend. So we can quickly look at some yens. And I'll show you the neutrality here. Okay, here's my Swissy yen, and it's going nowhere incredibly fast, or it's going up incredibly slow. I can't really tell. The thing is, it shouldn't go up. It shouldn't go down. Okay. And there's no cherry on top either. The interest rate differential, let me zoom in here so you can see it. The interest rate differential is less than 2%. It's not even a real carry trade, huh? I mean, really, what you want is a carry trade that moves sideways like this. You want, with the carry trade, you want sideways. If you're long a carry trade, you're like anything but down. But if it goes up too quickly, you make 10 times more money on the pips than you do the carry. So very quickly, emotionally and mentally, or even just like financially, your carry trade pales in comparison. So it stops being a carry trade. It starts being a pip trade again, just like every other trade. And you cash out because, yeah, it's a carry trade. But if you, let's say, I've been in situations where I got in because of a carry trade, but I remember thinking this way. If I cash out now, the pips are worth 1 year of carry. So I'm like, you know what? Pay me now. I'll take the year. I'll take the rest of the year off and break even cash wise, right on the flow. So you can see all of a sudden you talk yourself out of really good trades. So you want sideways, but even 2% carry is almost nothing, right? Well, if 50-1 leverage in the United States is still 10% a year, which is pretty good, actually. But whatever. So there you go. That's the face of mediocrity. What do you think? Well, we saw it quantitatively. Now you're looking at it price versus time. Isn't that interesting? You can look at it quantitatively, and QuantBox is like, yeah, no. It's a yen. Yeah, but it's funding pair versus funding pair. And so it's interesting that you can see it quantitatively and then pull up a chart and then see it technically. Now we compare and contrast to this one. And well, what's going on here? It's different. It looks way different than the Swissy yen chart, doesn't it? Yeah. So what seems to be working here? I guess I can move my stop. Look at the size of my stop. I think that might have been a mistake, huh? Um, here, 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 here. Wait, what? Buy at the 21 EMA? No, that's too simple. Yeah. That's too simple. That can't work. You're right. Okay. Yeah, you're right. So anyway, so I'm held down now by the 5 EMA. This could be a choppy day, but I got fish in my net, and that's all that matters. Cool. And I think we looked at a pound, didn't we? Look at pound. I think we can look at pound. Let me get rid of this. This is from the day trading group last night. Last night. And it looks very similar. Let me get rid of this just because it's in the way. Delete. All right. So what's the play? Okay. Buy at the moving averages, buy at the moving averages, buy at the moving averages, buy at the moving averages. Didn't quite get there, but close. Close. Okay. Maybe. Maybe. The concern here is not the 21. I love buying at the 21. But if you don't mind going a little technical, I know this is QuantBox, but let's go a little technical. Um, this setup shows vulnerability. Okay, so I see this wick low to that high to this wick low. That's actually too low. Gives me some concern. So I look at that and I think, well, that's a 786. 786 is set up in head and shoulders, don't they? Mm. Well, as a trader, I still buy the 21. But I understand the adversary I have in front of me. So I can cower or I can attack. I'm going to come at him like a spider monkey on Mountain Dew. Yeah. But I understand the vulnerability. So, uh, you know, part of, let's say military strategy is having a fallback position. Knowing when to get out is more important before it's a bloodbath, right? Regroup, fall back, find a way to get the advantage, take control of the situation, change the environment. And so if that happens, oh yeah, I'm out. Now, interesting enough, now I have artificial intelligence doing technical analysis for me. And it also pointed that out. And I'm like, oh, snap. It pointed it out. I can't show you, pretty soon, though. Pretty soon. If you're on the list, you're going to see some things pretty soon. But it also highlighted the same risk to me. And I'm like, ooh, it's weird when the machine starts thinking like you. It makes me mad a little bit, actually. Maybe I'm just a machine. Yeah. How do I know I'm real? Right? I don't know. I don't know. But there, I've learned that the hard way, and I can tell you, I don't know if I remember specific events, but in general, I remember learning that the hard way. The difference between a pullback and a reversal. And it's weird for a machine to just point it out because you have to teach the machine, but you teach it without the pain and the suffering. You just enter the data. You're like, okay, if it pulls back more than 786, then that predicts a lower high, which would be a 618 of the 786. And then that would set up a short. And then it goes and looks and confirms, yes, we see that. So therefore, that is likely true. But it doesn't have the pain and suffering. So what did I just say? I said the pullback is greater than a what I said, a 786. I don't even have a 786 on that, but I know it's about uh, here. Okay. And then I said that makes us vulnerable the other way, a 618 of a 786. Ugh. And there it is. Now, okay. Now it takes me a, a millionth of a second to see that after 20 years of observation. But you know what you don't, now that you see what I see, what you don't see is the blood, the sweat, and definitely the tears that is, for me, is emotionally tied up into a pattern like this. And now traders just points it out, which is great because you might have missed it. And those subtleties, well, it takes me 20 years to get, and now you have a machine do it for you. So it's like you get it without the blood, sweat, without the pain and the suffering. But anyways, so I do notice that. And then the last thing I want to add to it is, how do I behave because of it? Do I freeze? No, I understand the threat, but I attack. Right? My son and I were going somewhere. I can't even remember where we were, but we saw this ginormous dude. Like, this guy was just a monster. He was so big as a human, right? And my son says something like, can you imagine fighting that guy? I'm like, go for the knees. Like, that's it. Like, if it comes down for it, go for the knees. Stay away. Keep your distance. Don't let him grab you. Don't let him grab you. If he grabs you, you're dead. So keep your distance, go for the knees. If he can't move, his size is going to be irrelevant. And that's all it is, right? Like, change your approach. Understand your strengths, understand their weaknesses. In this case, I'm like, I totally get the fact that this could go up to that 618, or what I have as a 66, or you might see it as a head and shoulders. Great, I see that too. I'm going to attack. My other choice is run. I'm like, I don't know. I got bills to feed and mouths to pay. So I'm going to attack, but I'm not going to lose money. That's the idea, right? Yeah. So, anyways, that was too long of a quant box, but I love what we do. Thank you for getting up early in the morning. It's good to see everybody here. Lots of people, right? More and more people are here every morning. I appreciate you. Okay. Peace on earth. May the pips be with you. May your profits be above average. I'll see you later, I am sure. Remember, I got Forex today coming up, but then this afternoon, we have the day trading and swing trading group meeting for the week on the street. We're going to go through the Fed meeting minutes, and that's at Investor Boot Camp. So lots going on. Make sure you sign up on TRADARS for traders. Get your name on the list for tradars.co, because we do have a lot of amazing things. We have the technology now on the front end, but now we got to make the front end look pretty. So we are very, 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 very close to launching that. It works. It's great. It's pretty, but we got to put lipstick on the pig, stuff it into a pretty dress, and then I'll introduce you. So I'll see you soon. Get on the list. Cheers.